everyone knows NVIDIA has been the enabler of these amazing breakthroughs in AI. But they're not thinking about who the prime beneficiaries are going to be. And we've taken a strong point of view on that. Every stock in our portfolio, practically, is there with AI as a reason. We're getting more proof of concept on deflation, too. So it starts at the commodity level, always does, right? Copper prices peaked at $5. They're now about $3.50. Oil, even, is down to, well, it's in the 70s, but even more interesting to us is gasoline is pointing to much lower oil prices. The demand destruction in gasoline right now, because of the pricing, is so high. I think gasoline demand was around the Labor Day holiday, hadn't been this low in 25 years, something like that. Big demand destruction in all kinds of categories, including staples. Now, the Procter & Gamble's and, staples companies, they took full advantage of supply chain crisis and jacked prices up. Guess what? Their volumes are falling. That is not a good recipe for a manufacturing company. You want to keep your manufacturing plants running full time. And now they're seeing a pullback in unit volume. We're seeing in the S&P 500, about a third of the S&P 500, a third of the companies are showing falling revenues. Falling revenues. That means the combination of units and pricing, that combination is down. If you look at commodity prices as measured by the Bloomberg Commodity Price Index, they are today where they were in the early 80s. They've gone nowhere.
So then what is the implication for rates, for the economy, the picture sounds dire from what you're talking about.
Well, M2 growth has been negative all this year on a year-over-year basis. The yield curve has been inverted all year, actually almost a year and a half, roughly a year.
But no recession yet.
Rolling recession. Housing, by some measure, sales down 40%. That's a recession there. Auto sales, 15 million units. That's recessionary. Falling prices as units fall, that sounds recessionary. And that's happening in staples. Home Depot today, sure, it was one of the biggest beneficiaries, but it's been 2 to 3 years now, and it's still saying minus 3% same-store sales growth. That's both price and profits, and deeper negative here in the U.S., minus 3.8. So I'm looking at statistics and I'm listening to earnings calls. When I listen to earnings calls, I listen not just to ours, but to other more cyclical companies, just to get a sense of the economy. You listen to them and you'd think we're in a recession. Now, it depends on the area. We're in today's CPI, you saw auto prices coming down, you saw airline prices coming down. So you saw education prices coming down, oil and energy, transportation we knew about. Rents, the pop last month reversed, didn't go negative, but in the real world, we're hearing about serious rent declines or serious discounts like 6 months free or 1 month or 1 year free. So I think it's all around us. The Fed is paying attention to lagging indicators. One is the CPI. It's gone from 9 to now roughly 3. We think it's going to turn negative before all is said and done. The other one is employment. Now, what the heck is going on in employment if what I just told you is true?
Right.
We know how many companies had such trouble finding anyone as we were coming out of COVID. They're reluctant to fire people even though their margins are starting to fall, so they don't want to go through that again.
Right.
Today, we're delving into El Salvador's Bitcoin roller coaster, predicting the future of Bitcoin, and uncovering the dramatic tale of ECB President Lagarde's son, who faced a turbulent ride through the crypto universe. Despite El Salvador's resilience in the market's rebound, their Bitcoin portfolio is down 6.4%. President Buchel's crypto journey, meticulously tracked by the Nabil portfolio tracker, reads like a crypto novel, From buying the dip to catching falling knives, Bugle's moves mirror the market's unpredictability, with 3,120 for BTC in hand and a 6.44% loss. El Salvador's crypto adventure continues. Will they weather the storm or find smoother waters? Now, let's explore the future of Bitcoin after a roller coaster year of highs and lows, cruising at $37,758. Could Bitcoin soar to $177,300 or take a dive to $627.57 post the 2024 halving event? The crypto crystal ball is out, predicting the comeback kid's fate. Will Bitcoin continue its historic trends and market dynamics? Or is a surprise twist in the cards, in a shocking plot twist? ECB President Christine Lagarde's son decided to test the crypto waters. Against his mother's advice, despite Lagarde's warnings, he invested and lost almost everything. Lagarde stands firm on her anti-crypto stance, revealing her son's misadventure, a cautionary tale wrapped in digital currency intrigue. Will Lagarde's son make a crypto comeback? Or is this the end of his crypto escapade? That's a wrap for today's crypto drama unleashed El Salvador's wild ride, Bitcoin's future predictions, and Lagarde's son's crypto roller coaster. Who said finance can't be thrilling? Stay tuned as we continue our discussion with Cathie Wood.
So until today, this year has been a tale of two markets. Through July, it was risk on. Why? Because the market was seeing surprises in terms of oil prices coming down, auto prices coming down, and saying, oh, the Fed must surely be done. And then we get a CPI print or a PCE print that disappoints, and the Fed continuing to say, oh, no, we're higher for longer, and we absolutely will raise interest rates if we cannot see 2% inflation. So I think they're in the process of making a mistake. But in the beginning of the year, people were saying, okay, the numbers are coming down, inflation's, doing what it should do. Then we had this pause where, are we stuck here at 3 to 4%? Many people think we are because they see these wage hikes going through, 10% per year, 6% per year. And they say, surely we're back in a 70s style inflation. And that, that's what the Stanley Druckenmillers and the bears out there are thinking. We think that is absolutely wrong. That the resolution of that 10% push in wages per year will end up in lower margins. Big problem, not in higher prices. Big difference, very big difference. And so I think it's from the end of July through, really it was through the end of October, we went through this big nervous period where the long bond yield started rising relative to the short-term yields. Still an inverted yield curve, but long yields were rising. It was a bear flattening, not a bull flattening. A bull flattening is when short rates come down relative to long rates. So a bear flattening went risk off. People sold our strategy, sold anything risk off, and moved back to their benchmarks, moved into cash, huge amounts of cash on the sidelines. Now we're getting more prints again that are saying the Fed probably has overdone it. And you just listen to quarterly company calls, and you'll listen to these management teams, and we have lots of callbacks with managements, and they're saying, why are you the only one seeing recession? Why can't the Fed see this? This is what we're going through. And I do think the Fed is using lagging indicators for monetary policy, which is unfortunate.
I want to turn to some of your individual holdings, but just quickly, what does 2024 look like for ARK, for your strategy specifically?
I think we paid our dues during 21 and 22. We were down in 21 when the market hit all-time highs, just on the expectation of rates going up. And then on the reality of rates going up, we were crushed in 2022. The market has discounted what the Fed has done. I don't think the Fed's going any further. If the market can feel comfortable that that is indeed the case, we don't have to have rates even come down. We think they will, but we think that certainly our strategy has discounted the worst. I don't think value stocks have discounted the worst of the cyclical part of the recession. We tend to be recession resistant. The last leg here is going to be consumption.
If you found value in the content, hit the like button, as that helps us reach more viewers like you. If you're not subscribed, hit the subscribe button, as we put out daily content to keep you updated. Thanks for watching, and we'll see you in the next one.